Okay, so it's about 3:30 p.m. right now on the East Coast. We have about 30 minutes left of trading here, and we have SoFi down over 2%, and every index in the U.S. stock market is down as well, with the VIX up over 10%. So, guys, you know the drill. We're going to break down the charts, my thoughts, what I'm looking to do here, and we'll cover why SoFi selling off in the first place. So guys, hit the like button. Do not forget to subscribe and get your free stocks from Moomoo. Open up your account using that link down below and fund it with at least $100. You'll get 5 free stocks. Fund it with at least $1,000. You'll get 10 more free stocks, and overall your uninvested cash for now will earn up to 8.1% APY. So again, guys, use that link down below or go to stocksurfs.com/Moomoo. Get your free money. And with that being said, cheers. Let's get into it. So like I said, guys, we have around 30 minutes left here in Power Hour in the day, and every index is down, and SoFi's down now almost 2.5% on the day. It's trading at $15.65, and that's after we got a downgrade from, I believe, B of A securities this morning, which we'll talk about. Yeah, B of A downgraded SoFi. We'll break that down more here in a little bit. I think they gave it a $12 price target, if I'm not mistaken. So we got that news. Boom, SoFi sold off. And man, it's been choppy all day. But overall, we've been red all day. And now on the 10-day, 30-minute chart, you guys can see we're under both moving averages. We have a death cross, and we still have that head and shoulders, which we've talked about here on the channel, right? And on the 20-day chart, you guys can see we're still in a wedge. So we've talked about how SoFi for the last couple of days has been making lower highs, right? You guys see that 1660, 1655, 45, right? All the way down here. But at the same time, we were making higher lows for quite some time, for a couple of weeks. More than just that, months at this point, right? But really over the last, week or so, we've made this wedge as we've started making these lower highs. So the $1 million question is, guys, what direction will SoFi pick? Do we take out $16.15, $16.25 and start breaking out to $16.60 again? Or are we going to dump down, break the overall uptrend, the higher lows that we've been making? What direction are we going to pick, right? So that's what it comes down to in the very short term here on these charts. And on the 4-hour chart, looks like obviously we're well above the 180 SMA still, but we're battling to get back over the 50 SMA, which now we're slightly under that point. So like I said, guys, SoFi stock is selling off today because Bank of America, B of A, they downgraded the stock. Let me pull this up and show you guys here. And by the way, sign up to the email list if you haven't done so already. I'm sending out my top 3 stocks every single Monday, and I actually just sent an email out to over 1,700 people earlier today. And guys, it's free. It's completely free of charge. All you guys have to do is sign up using that link in the description box. So B of A reportedly downgraded SoFi Technologies to underperform from neutral while keeping the price target unchanged at $12. So they didn't cut the price target. It was at $12 before. That remains unchanged, but they did downgrade the rating from neutral now to underperform, right? And by the way, just because an analyst, a firm, a bank, whatever, upgrades or downgrades a stock, it shouldn't necessarily influence your judgment or your decision. Take it with a grain of salt, but we still like looking at it, looking at the reasons overall as to why. So if I zoom in a little bit here, and don't mind all these ads, guys, sorry about that, but we can see here, like I said, $12 price target, that remains unchanged from from before, but they did downgrade the overall rating. The brokerage noted that the stock is up 120% in the past 3 months, partly due to Trump's victory in the U.S. presidential election and favorable third quarter results, right? And the strong financials, yada, 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 right? Net income for the quarter stood at $60 million compared to a net loss of $266 million last year, right? The management also raised their full-year guidance, expecting to deliver adjusted net revenue of $2.53 to $2.55 billion, $85 million higher than the prior guidance range of $2.43 to $2.47 billion. Adjusted earnings, EBITDA, let's see here, of $640 to $645 million, above the prior guidance. So yeah, we get it. Sofi has been crushing it, but B of A indicated that although recent execution was solid, valuation is ahead of the firm's fundamentals after the surge in the stock price. So what it comes down to, guys, B of A is not saying Sofi is a bad business. They're going to collapse. They're not a, profitable company. They're not improving. They're not saying that. All they're saying is the stock price, remember, price is what you pay, value is what you get. The price is way higher than the value in their eyes that you're getting right now. That's essentially what they're saying, and they cut the price, or not even cut the price target, but they reduced their rating from, again, neutral to now underweight, or underperform rather. But yeah, that's pretty much the news here, guys. Nothing too crazy, not surprising, quite frankly, considering how much the stock has gone up. There's still a lot of bullish firms on Wall Street, analysts, obviously, but there's going to be some bears as well, especially after we've seen a huge run-up. You guys have to realize this is how it works. When a stock goes up a lot, although you have to take it with a grain of salt, analysts are going to cut their price targets. They're going to, adjust their ratings. They're going to take profits if they're already in the stock. Wall Street, guys, what retail investors and traders, us in other words, what we have over Wall Street is that we have a longer time horizon. We don't have to report to clients every quarter and try and chase returns, so we're able to sit on stocks a bit longer. That is one of the many advantages retail has over Wall Street. A lot of people think, Wall Street, they have every advantage over retail. I mean, yes, they do have a lot of money. They do have all the, algorithms, the information, the equipment, this, that, the third, to make the best decisions, right? They do have all that, the research, the analysts, but retail does have a lot of advantages as well, with, again, one of them being they don't have to report to, clients every quarter, or whoever is the upper management, right? So they can sit on stocks a bit longer, and they can buy stocks that are a bit riskier. A lot of these institutions, firms, they can't even get into Sofi, let's say when it was at $5, or maybe when they were unprofitable or something, So retail, they can buy whatever stock they want, take whatever risk they want. Maybe it's not the best idea to do that all the time, take a bunch of crazy risks, but they have the ability to do so, right? So what do you guys think? That's a quick breakdown here on kind of what I'm seeing on these charts, the news, a little insight there. And yeah, keep your eyes on the wedge here on the 1 hour chart. Let's see what direction we end up picking. So guys, hit the like button. Do not forget to subscribe here on YouTube and snag up your free stocks. Check out that link down below for Moomoo. Open up your account and fund it with at least $100. You get 5 free stocks. Fund it with at least $1,000. You get 10 more free stocks. And overall, your uninvested cash for now will earn up to 8.1%. APY. And guys, the clock's ticking, so use that link down below or go to stocksurfs.com/Mumu. Get your stocks. And with that being said, cheers. I'll catch you guys in the next video.